Welcome back to Investing with Confidence. I am your host, Joshua David. And if you're just tuning in, you just missed Al talking about these other markets that a lot of people like to utilize to have income potential, get into the futures market, the Forex market. Also, why there's a gap between your financial expectations and where you really are, but really how to close that gap potentially. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also text the numbers text the word invest to 484848, and we'll get back to you as soon as we can on that. So, Al, as you wanted to get into in this next segment, we talked a little bit about 401ks right at the end of the segment, and you want to talk a little bit about why your retirement recommendations that you're really being put into, why that most Americans are still falling short of their retirement goals. The people don't have enough to retire, but we're being told that we're going to be in these great plans that get us to those golden years. Well, the fact of the matter is they're not. They're not getting people there, and people understand that, but they're still being conditioned and almost persuaded to continue that investment style, even though they can't get there. What are some of those reasons that's slowing them down? What's impacting their 401ks, their IRAs, 403bs, TSPs, any retirement account they have? What is impacting them? But how can we get away from or potentially do something a little bit different?
Yeah, unfortunately, a lot of people are relying on something that's kind of outdated, strategies and recommendations that are outdated. People are living a lot longer now, but a lot of the strategies that people are using were really based more on a much shorter lifespan. And here's some of the problems that we have. The 401ks, 403bs, they have been sold to people. That's kind of, and again, one of those conditioning things as this great investment vehicle. They never were intended as your primary investment source. It was just kind of an adjunct. It was something, really, it was more of a tax haven for high-paid executives.
Yeah, there's really to shelter some of those taxes back in the late 70s, early 80s for those high-income people.
And here's one of the problems. People used to rely on pensions. When you had a pension, all the responsibility was on the company and the person that was controlling that pension plan. They had an obligation to you. You didn't have to do anything. You didn't have to make any choices. And then all of a sudden, pension plans were cut out. Most people don't have a pension plan. They were automatically then just put into a 401k or 403b. Now, who has the responsibility of making the choices? It's you. So now you have become your own pension fund manager without the training to do that. Plus, for the right to be your own pension fund manager, make your own choices, you still have to pay fees.
Yeah, it was almost like back then with pension funds, the funds and the employer was actually working for the employee. Now it's really shifted. The employee is working for the employer, but they are also still working for their 401ks. That's a problem there, and it's being proclaimed to be something different.
Yeah, the employee really now is on their own. They have to make their own decisions. But what they don't understand, and it really hasn't been explained to them, there are high fees associated with these plans, most of which you will never find. You'll never know what they are, but they can take a substantial amount away from what you could have when you retire. We talk about this a lot, where over the course of your working years, what if you work 30 or 40 years and then you found out that maybe 40 to 60% of what you could have in your retirement is gone? That's one of the reasons there's this crisis. That's because of fees. It's also because there's no protection in those accounts. If you have a 401k, 403b, typically you're in mutual funds. All you can do is hope that those funds don't go down as much as the market in general. If we have a bear market, and this again is one of the reasons that people find their retirement accounts haven't kept up with where they thought they should be, because occasionally you go through a major correction or bear market, which can take maybe 50 or 60% away from what you have because there's no way to protect it. And you're not participating if the market is going down. You can do that. You have the opportunity to potentially benefit in a down market and to have your assets protected, but you need to have the right education, the right knowledge to do that. And that's exactly what we talk about in these classes.
Yeah, you need those right tools. But I was teaching one of these investing classes, I believe it was last week. And, we're being conditioned to do so many things. We're being conditioned numbers as well. And I did a little quiz in the investing class. I said, how many of you right here, there's probably, 8, 10 people in there or so. And I said, well, what do you think is an average fee that people are being charged, or what do you think is good? And we all wrote it down, didn't tell anybody. And when we all showed our number, it was always all of us had the same exact thing. Everybody said 2 to 3%, right? 1 to 2 to 3% of average fee. Is there a disconnect there? Why are we all saying the same thing? Because we're being conditioned to say that's what it is. We're hearing that from Wall Street, the brokers, the advisors. Well, the fact of the matter is there's more fees that come along in your investment retirement plans. You have those management fees, you have prospectus fees, you have mutual fund fees. Sometimes those fees can be much higher, but we're being conditioned to see that low fee.
Yeah, there can be 15 to 17 different fees within a 401k. And there's a reason you do not get a separate bill for fees, because that would really infuriate people.
You're right. And you teach these investing classes. I mean, and we both do. And we talk a lot about how these fees can impact you, but how to potentially lower those fees. What are some of the techniques you can utilize to lower? Are you being put in underperforming mutual funds? Do you have no protection in your retirement account? But also lower those fees. If you want to learn more about potentially lowering fees, protecting your portfolios, hopefully keeping some of the gains that you've had in these past bull markets, we have these investing classes. They're free. They're only 2 hours. They're right here in Bloomington locally. We've been here for over, Online Trading Academy has been around for over 24 years. So callers 1 through 10, I want to invite you to this class. When you call in right now, you're going to receive 2 tickets so you can bring your spouse or a friend, but also the retirement planner. That will actually help you get started with some of these concepts right away. Call 952-814-4410. That's 952-814-4410. So with these fees, the underperforming markets and stuff like that, what are some alternatives that our listeners have?
Yeah, and again, these are things we go over in this class, but unfortunately, they're things that you're not guided on by Wall Street. The 401ks are a fantastic vehicle for Wall Street. Very little work, high fees. It's a great income source for them with very little output as far as the work that they have to do to help you. Really, there really is no help. I mean, they'll give you a list of things to invest in, but then you're pretty much on your own and you're still paying those fees. So how do you get around that? Well, number one, learn what you have in your retirement accounts. Over 50%, almost 50%, I should say, of retirees don't even know what they have in their accounts. So how can you get better benefits from those accounts if you don't know what you have? Because you have numerous choices there. But what a lot of people do to eliminate the fees and have more choices is to set up a self-directed IRA. When you leave a company for any reason, you can rotate that 401k into a self-directed IRA where you don't have any fees. You're still making your choices, which you did in your 401ks, but now you have many more choices. You can, if you want to invest in mutual funds, you can, but you can invest in individual stocks. You can invest in options in the futures market, in the foreign exchange market. You can have protection like an insurance policy on your portfolio. You can participate potentially beneficially in a down market and a sideways market. You just increase your odds from 1 out of 3 to 3 out of 3, and you've eliminated those fees that is like a vacuum cleaner sucking money out of your retirement accounts on a daily basis.
Yeah, and that's a very good vacuum. I mean, Al, in these investing classes that I teach, I actually did another quiz this past week, and we said, what is the average rate of return you should expect on your 401k? If you're listening right now, think about that for a second. What is the average rate of return you should expect? What are we being told what we should expect? We all did the same thing. We put that number on a piece of paper, and we all showed that number. If you're listening right now, what's that number for you? And we all said anywhere between 6 to 8% is a good return. That's what we should see. Who's telling us this? Now, here's a crazy thing. The people on the YouTube stream right now can see this, but I just Googled it. I said, what is the average rate of return of a 401k? And it says, that being said, although each 401k plan is different, contributions accumulated within your plan, think about this, which are diversified among stock, bond, and cash investments, can provide an average annual return ranging from 5 to 8%. Imagine that. We're being conditioned and told what we should get. Don't be told. Don't be conditioned. Don't be stuck to these lackluster performing 401ks. learn the techniques, understand the tools and proper rules to do them yourself. And we're going to talk a little bit more about that in the next segment here. But if you want to learn more on how to get started to potentially lower fees in your retirement accounts, get the returns that you're hoping for. I mean, we don't know what those returns are. That's what you have to decide. Call 952-814-4410 for 2 tickets for this free investing class. They're in Bloomington here. They're only for 2 hours, and Al teaches these. 952-814-4410. You can also text the word invest to the number 484848. Al, what's next?
Well, you know what? I think we've got a lot more to talk about as far as retirement, because that's a really huge, important part of your life, and we're all going to be there at some point in time.
More retirement talk, techniques, and strategies to hopefully get to that promised land. 952-814-4410 for 2 tickets for the free investing class. We'll be right back.